Welcome to Advisor Talk with Frank LaRosa. Brought to you by Elite Consulting Partners, it's the only podcast offering unfiltered guidance and direct advice for all things concerning financial advisors, RIAs, and the practitioners in the wealth management business. Learn more and subscribe today at eliteconsultingpartners.com/podcast. And now, here's your host, Frank LaRosa.
Hey everybody, welcome to Advisor Talk with Frank LaRosa. I am your host, Frank LaRosa, and I am joined today for our very first podcast of 2023. So it's awesome and something that we've been trying to get on our calendar for a long time. But I'm joined here by Matt Reiner. Matt Reiner is the managing partner of Capital Investments down in Atlanta, Georgia. Matt, how you doing? And welcome to the new year.
Frank, Happy New Year. Thanks for having me. I'm glad to be the first of 2023. So hopefully I can help to kick it off on the right foot. But really appreciate you having me and glad we were able to get this figured out.
We were, again, despite our baseball rivalries, we'll put that, I do a lot of business in the Atlanta, Georgia marketplace. I'm okay with Atlanta, right? If you were the Mets fan, we probably wouldn't be doing this, doing this podcast, but that's okay.
Where we agree. Where we agree.
Hey, Matt, so for my audience, just by way of background, right? So you're a managing partner at Capital Investment Partners down in the Atlanta marketplace. Give us some idea of sort of what your firm is about, how it started, right? And then we'll just sort of go from there. As always, this is just a conversation with two guys talking about the business and trying to have our audience learn something if we possibly can.
Yeah. Hopefully I can distill maybe one piece of wisdom somewhere along the way. But yeah, so my quick background, I grew up in the industry. So Capital Investment Advisors was founded by my dad 26 years ago now. And so, I was watching him grow that business. And, fortunately we got lucky and we had a lot of success and had a lot of great people as a part of that business. And I was able to join the business and started out as an advisor. And then, did some things on operations and technology, investments and everything around the board. And then, we started our technology endeavor, which I then took the lead on and headed up going forward. But Capital, has been a business that has been really fortunate. And, it's a family-run business. Dad still manages clients, but it's not involved in the business of it anymore. My brother and I and one of our other business partners, and my brother really runs a lot of the day-to-day of that business. And, running a family business is unique, and we can get into some of those challenges and lessons that have been learned. But Dad did a great job of bringing us in, giving us our ability, our room to grow. And that business now, as like I said, been very successful in growing to serve families, and we judge success by how many families we're serving. So I always say to people, growing up, my cartoons was CNBC, and so I watched CNBC a lot growing up, and I used to go in and help identify premium and discounts on closed-end funds and do some tracking of NAVs on ETFs and all that type of stuff. So I've been around it for a while, and I always told people the only thing I would have been doing was being wealth management or be a professional baseball player. My baseball dreams were smashed pretty early, given I wasn't as big as I thought I was going to be. So this was kind of the journey.
Awesome. So yeah, you actually just in that, there's a couple of things that I want to come back to. Well, I'll just jump right into it. And I know this is something that we weren't planning on talking about, but you talk about family dynamics, right? There's a lot of advisors that listen to our podcast that we work with that are part of a family. I actually had a call with an advisor today. It was the father's significantly older, and there's always some dynamics there. And I've seen teams break up because of family dynamics. Not necessarily that they're all one family, but one partner brings in somebody else from the family, right? Somebody else from their family creates some other issues. How have you, and you also said that you got lucky. I don't believe in luck, right? I believe that your dad saw something, built something, brought you guys in, and not all family businesses work out, right? So it's not really luck. You guys were doing something well that allowed you to be efficient. Dad's doing what he's doing. That's probably, I would say, shaking hands and kissing babies, bringing assets in, right? Hey, Dad, that's awesome. Go out and get another one. But what would you say if you had to sort of point on one or two things that have allowed you to run a family business together. Not perfectly. I'm sure you guys have your moments like everybody does, but what is it that's helped you be successful running a family practice like that?
Yeah. Such a good question, and pinpointed it down to the one or two things, and I think your point that you just made there of like, what has been successful, and I know there's been challenges. I think that's something that everybody has to understand, right? We've been very fortunate in built a business, but it hasn't been just all smooth sailing. There's been a lot of challenges that have gone on, and that's in any business, right? You always just look at where they are at the output, but nobody looks at the process, and in the process, there's some things that work and some things that don't. And it gets messy at times, but I would say that the two things that stick in my mind right away is culture is one of the things, and that was established by Dad from the beginning. And I think it's also a autonomy as well. And what I mean by that is I think that Dad did a great job of building a culture that was surrounded by people that cared. And I know that everybody has that business, but it was a deeper relationship that Dad built with every employee, even when we got to 20 or 25 employees. And that's one of the reasons why he wanted to step aside from running the business, is once he got to a point, like, he never envisioned running a 70-person business. Like, that wasn't his. He likes relationships, and he built deep relationships, and people saw him as a father figure. And that allows for, when people have that belief in the leader, and there's a culture of that in the business, then that transition goes on. And then that leads into the number two idea with autonomy, is that Dad gave us our ability to go and do different things within the business. And he gave us that ability to fail, an ability to learn, and was always there supportive, not always there, saying that we were right, but he supported it. And if we did something wrong, he was there to tell us. Like, he was stern. He wasn't just like, oh, freedom. But what that allowed for is it allowed for us, to adopt the same mentality and the same culture. And although we have grown and we now have to business size a little bit more, and it's harder to be that family culture when you have 70 people across 5 different offices in 5 different cities, it's harder. But at the core foundation that Dad built allowed for it, and the autonomy that he gave to me and my brother to go and learn about what we really like in the business and where we can excel. My brother is an amazing operator. He is a visionary. He's an operator, though, as well. And he knows how to run and be efficient, and he has a vision for the business. And I have my own skill sets of, from branding to technology to relationships as well. And, the ability to give us both those paths and allow for the business to flourish by us both going down our own avenues, and to have the platform and the encouragement from Dad to do that, it was extremely encouraging. And he didn't force us in this business. He said, you can come if you want. There's a phone and a desk ready for you if you'd like it, but come if you want. And if you do, I'll let you come in. And he was always receptive to our ideas. Now, he didn't always agree with them, and he didn't always like them, but he heard them, which gave us a voice at the table, which gave us now something that we feel that we had to hold on to, right? We couldn't let that go. And so it was something that we had to be very cautious of and respect. But it did take Dad time to let go as well. Just like we talked in my podcast on Bridging the Gap about, letting go of control. It took Dad a long time because this was his baby, but eventually he had enough trust. He saw enough output from us, and he had enough belief in the way that we were growing, because he gave us the reins and we exceeded. And so I just think but the culture and the autonomy was two of the biggest things that I think were extremely important to allowing Mitchell, my brother, to do and really grow the business as he has, and allow me to kind of go and build out some of the technology and build brand and everything on that side.
So I'm going to touch on that, because having been in the business a long time, and recognizing that your dad has been in the business a long time, and is a focus on clients, right? And I know what that mentality is like for some of this, I'll say more experienced. Not older, but more experienced. How did you've talked about efficiency, and then you talked about technology. How did you get your dad to recognize, and how did you implement technology that creates efficiencies for the benefit of a client? And the reason I ask that question is because a lot of advisors, maybe on the older side of the spectrum, right, sometimes view efficiency and processes like we talked about on your podcast, right, Bridging the Gap. So if you're, again, now you've heard that twice, so you want to check out a great podcast, go check out Matt's podcast, Bridging the Gap. Lots of great stuff on there. I was here the other night. My wife's like, "Why are you still at work?" I'm like, I'm listening to this great content from this guy Matt. I'm talking to this week. It was good stuff. But anyway, what's your opinion on efficiencies and process actually leading to increased higher touch service for your clients? Because that's obviously something that you had to convince your dad was a good thing.
Yeah, that's an interesting question, and I don't know if my answer is going to be that great, to be honest. And the reason I say that is that, with Dad, when we were doing when we were taking on new challenges or new endeavors, we always started small. And we usually never included him in the sense of like him and his clients, right? We would just go do it with like our own clients, but he always believed in us. And it was because of how we acted and how we showed up that he said, well, if they have this belief, we didn't take anything for granted. We worked our tails off. Me and my brother, when we first joined, nobody in our office wears ties. And I don't even know if this was like worthwhile back then, but like me and him would wear ties every day to work. Like, all the time. Nobody else did because we wanted to earn the respect. We didn't want to just be given it. We were the first people in the office every single day. We brought in the paper. We made the coffee. We were the last ones to leave. Like, we wanted to earn the respect because we didn't want to feel that we were given a great opportunity, but we didn't want to have that change the mentality. And so I think Dad saw that and said, you know what? They're not just taking this for granted. They're working their tails off, and I'm going to listen to them. And then something that we talked about in my podcast was he also said, what's the impact that this decision will make? Like, is it going to lose us clients? Is it going to, make our business fail? It's not. So I'm going to let them go and do it, and they're going to learn. Maybe it works, maybe it doesn't, but I'm going to let them go do it and see if it works. And you know what? I'll be an advocate because he needed to be the advocate to the rest of the firm, right? To do it. But he gave us that room to go run. And then if it worked, we would come back and say, hey, this worked. And then he would be even more of an advocate but then if it didn't work, you know what? Those times when it didn't work were the times when, me and him have had the best conversations because, it was like, well, what did you learn? Like, where did you go wrong? And like, it made me realize things that I now was better on. And the reason I say that this isn't a great answer is because Dad never really used much of our efficiencies. And the reason is because he was just built in his way. And so for us to build the firm, we built it basically around him and said, all right. And he was a proponent of that. He was okay with that. He's like, you know what? I know that it's good for the greater good of the firm and the clients. And, I'm not going to necessarily lead by example by doing it all that they're doing, but I'm going to try, and if I don't even use it, I'll definitely talk about it and talk about how good it is and want to know about it.
Right. So then tell me, from your perspective, and it is a great answer because basically what you said was you understood your audience, meaning your dad, right? And you saw an opportunity, and that was using technology to create efficiencies to have better service models, right? So you managed around what you had to do. So, and then you talked about our technology endeavor, right? So from your perspective, then, how are you using technology and efficiencies to increase your service model to your clients?
You've mentioned it to me on some of our conversations, but you talk about how you're obsessed with efficiency. I love that. Right. That's such an awesome focus of, you're like in Salesforce and y'all Salesforce, you're talking about how can we just make it one less click? How can we make it one less click here? And I think that the challenge that we face in our industry is that there's a few, right? Is that we have so many technologies that we need to use. None of them talk to each other. We're not technologists, so we don't know how to do it. We bring in an IT team. They're more on IT, not in terms of development. They tell us something. We have no clue what they're talking about. We just say, go ahead. But then we try to tell them something, but they think that we're talking about, we tell them about baseball. They think we're talking about football. Like they just don't, like, it's just, there's a lot of waves. I think the challenge is that our technologies in this industry don't work together. And I think that there's a challenge as well, that because a lot of these firms that were established 15, 20 years ago were just built by one or two entrepreneurs that just did everything, that there's a lack of documentation of how to do things to make it consistent. And now we're 15 to 20 years later and we're busy, we've got clients, and we just don't have the time to break that down. And so the challenges that we faced was we had to rethink documentation. We had to rethink our processes. And then once we did that, we still had people having to bounce around multiple software. So then we had to solve the challenge. How do we bring it together so you can do more within less technologies, but still get the power of them? And I think that that's really kind of the aha moment for us, which led to us starting the company Benjamin, was, we like all these technologies. We don't want another technology, but it's something, can we bring these together in some unique way to where I can live in Salesforce or I can live in Redtail and I can still get the power of automation even deeper between, a Schwab deposit coming in. How can I create that task into Salesforce? Or an alert comes in, how do I make that a task or notify someone, the appropriate person, etc.? Then that's where we started to open up our minds, because I think that efficiency is a matter of how do I do less menial work, right? How do I do less menial work and do more sophisticated work, which is spending time and building relationships with my clients. And that should be everybody in an organization, from the person at the front desk to the person paying payroll to the person that's the advisor. I think that that's important because each of those people can create unique relationships with each of the clients that can get us information to be, as a firm, better able to serve them and create them this unique experience. And so for me, when I think about efficiencies and what we're doing, is that we are striving as an organization to bring people together, to give them one central location to live, to have access to everything that they need within that location to serve their clients. And how do we give them an ability to spend less time in the systems and more times with their clients? And more, when I say more time with their clients, not just like, surface level, go deep with them, right? Get present with them. And that's what we're striving to do. And we've made a ton of investment in people, investment in technology in order to help with that mission.
Awesome. So basically, Benjamin, so maybe to our listeners, describe what Benjamin actually is.
So Benjamin is a workflow automation engine. And I think that's a big fancy word, but I think the best way to explain what Benjamin does is, let's think about how online bill pay works. Online bill pay is a great example, because online bill pay at its core is an engine that connects your service provider, your utility company, your TV provider, whatever it may be, with your bank to execute on the menial, mundane task of sending a check. What online bill pay eliminated was all those steps that we used to have to do of writing the check, addressing the envelope, stamping the envelope. That's what they eliminated, all of those, by connecting service provider and bank. That's what Benjamin is an engine that connects your processes and your workflows that you have, whether you've established them or you haven't, with your technologies like your CRM, your reporting system, your custodian, your calendar, etc., to then execute on menial, mundane tasks that fall into one of three buckets. Anything around meetings, onboarding, with the exception of filling out paperwork, and then servicing. And so if you think about a lot of these menial tasks that people are still doing, like let's just take the simple one of, it's an annual review meeting. We still have someone at the front desk or an associate that's sending the calendar link out to the individual and then following up with them to make sure that they got it and that they scheduled. Like, that doesn't need to happen anymore, right? You can automate that and use it based on the frequency of the meeting or the client and the segment of the client or whatever it may be. Send the appropriate calendar link based on the advisor of the client. Like, all of that can be automated, along with pulling in data that you need for meeting preparation, like performance numbers, reporting data, notes from last meeting, alerts from the custodian, like all that can be pulled in. And you don't need to do that anymore because we can access that information and unify it. So what we are doing is we are eliminating the menial and mundane by being the connective tissue between processes and technologies. That's the simplest way to think about what our team at Benjamin has been able to build.
Okay. All focused on providing a higher level of service to your clients. which is tremendous.
And that just to relate on that, right? How we judge ROI for Benjamin is very simple. There's two levers that can be pulled: the number of processes that we automate and the percentage of the processes that we automate, right? So we may not automate the entire process, but can we automate more processes or more of a process? Because if we can do that, then that's taking tasks away from a human, not in a bad way to get them fired, but in a good way to provide them elevation of what they can do, because there's certain things that humans can do, EQ, psychological, conversational, everything of that nature, that technology is not great at. And that's where we need to be spending our time, not on spending time on things that technology can do really well.
Awesome. Let's talk about spending time with your clients, because I thought you had some great stuff online on your YouTube channel. And some of the stuff that you talk about is the psychology of working in conversations with clients. I was watching one that you're talking about having two clients were fighting in front of you, and how to deal with that and all that good stuff. So, but I've never seen, and I've worked with a lot of advisors, and I've never really had an advisor talk about sort of the psychology behind working with a client. What does that mean to you? Like, why are you it seems like you have an obsession in a good way. Like, you just hungry for the knowledge and peeling the onion back and discovery and what can I find next? What question is going to get a better answer? Like, why is it that you're obsessed? You seem to be obsessed with that, the psychology of working with a client like that.
Yeah, I think that I think that psychology is just amazingly intriguing, right? I think that the idea of managing money, I think that there's a few reasons why I'm obsessed with it. One, it's super interesting to me. Why do people make decisions that they do? You think about economists are just like, well, it's just because it's the economic theory. You have this, you do that, but that's not how people work, because that should happen all the time, but it doesn't happen ever. And I think that why also is that because I think that our industry is moving towards an environment where we have to find differentiated value to provide to our clients. It's not just a matter of that we can buy a mutual fund or sell a stock or any of that. That is the old guard. We have to move because that's now becoming commoditized. So we have to continue to find new ways. And I think that that's why I was like, well, what can we do more? And ultimately, if you think about what is our core reason as an advisor, is that we are ultimately trying to help our clients reach their legacy that they want, right? Fulfillment, their financial goals that they have, which is on the value stack is a little bit lower, but ultimately we want to help them have fulfillment. And the problem that they reach, that are challenged by humans, me, you, all of us, is that we get in our own way. We get in our own way. And the reason is because of psychology, because of how we think. So if we want to help people overcome that, we've got to understand why they're doing that. And we've got to think about asking questions and delivering information in a way that actually sticks. Not just that the client goes, okay, yeah, thanks.
Right.
And then walks out the door and is like, what do I do? Because there's a reason. It's not that people don't know that they should save. It's not a reason that people know. It's not that people know that they shouldn't read the headlines and they shouldn't act on the headlines. Everybody knows they shouldn't do that. Everybody knows they shouldn't sell when things are bad and they shouldn't buy when things are good, but they still do it. And the question is why? Why? We should know that so that we can help them navigate that. And it's not because we told you. That doesn't stick. We have to figure out and learn about the client to be able to talk about, when did they grow up? I love Morgan Housel's book, which is right over here, The Psychology of Money. When did they grow up and what time environment did they grow up and what was happening in that environment? Because that, when they were 15, 16, that's really they're understanding things. That stuff sticks and inherently they don't know it. And so I just think that the reason I'm so intrigued by it is because I want to find ways to help people get out of their own way, and just telling them that they shouldn't do something doesn't work because we've been doing that for years or decades and centuries, and people still aren't saving enough and they're not retiring fulfilled. So we've got to try something different. And also, it's just super intriguing. why people make certain decisions, and it just does not fall on economic theory as it is. And so it's behaviors, and we've got to help people make better behaviors. And I think that's our job.
That's really interesting that you talk about the psychology of how they grew up at the time period that they grew up. I think a lot of advisors, and firms, right, which is, I think, a problem that firms are getting into right now, is especially the larger firms, and they're trying to categorize clients into buckets. Well, if they're this age, if they're this age, they don't look at it like, well, if they're this age, it's because they grew up during a period of time of deep recession in the country. They look at it like, well, no, they're this age, they only have this much time left. So then they have to invest a certain way. That might not be the case, right? That person may view things differently. Maybe that person was a child, and during that environment, their dad or their parents were visionaries at the time and took advantage of the down market and a deep recession or something. And so that child saw something different from their parents. And maybe that now adult who's in their 60s or 70s is more aggressive, more advanced, isn't afraid of pullbacks because their mentality is much different. So I think that's brilliant. I've never actually really gone down that road. It's
well,
awesome.
Just think about this, right? Think about. There's two examples that I'd like to share. Is that one is think about this with regards to time periods and timelines of when they grew up, right? If someone grew up in, let's call it the 60s, 70s, maybe early 80s, before, the focus in that time frame was to pay down debt, get your mortgage paid off right away, right? And that was just the mentality. And if this was someone that was 15 to 25 that was in that period and saw their parents, like, that's instilled in them. And no matter what you do and what you say and what math you put in front of people, they may be like, yeah, that's nice, but they're probably not going to really truly believe it, because deep down you really can't change people. You can help them become more self-aware. But so if someone now advisor, if they just don't come in and like, hey, rates are low, you should get leverage. You should get a lot of leverage, right? Because rates are low. It makes so much financial sense. Let me show you this model of what it means to your retirement. It's going to fall on deaf ears. And so if you really want to help that client, you've got to understand that client, understand where they came from. And you know what? Maybe it's not the right decision to pay off their mortgage from a financial standpoint. But you know what it does? It makes them emotionally and psychologically satisfied. And that's going to win you over, because no client cares as much about, they don't care about the gains as much as the losses. We all know about loss aversion, right? If you look at an S curve, it's a steeper curve on the loss aversion than it is on the gain side. But what they're never going to, when the market goes down, and you had to convince them so hard to keep leverage, they're going to get fearful and they're going to put blame on you. Whereas if the markets go down and they feel satisfied, like you help them find fulfillment or value or psychological comfort, they're not going to worry as much about the market. You can control certain things. There's certain things that you can't control, which are the market. And so I think it's just so valuable to understand that, because it's not just about numbers. And that's where I think advisors sometimes get lost at times. Is about numbers, because I think about like Social Security is my second example, right? Social Security, we all break it down financially by like, where can you get the most money? And it's usually always if you take it at 70, right? That doesn't mean you get the most money. If you live to 83 or 82, like, you're gonna have the most money. But think about how the conversation changes if you understand the client's values and what they feel would make them fulfilled in life. And you understand that maybe 70 is not the right way. Yeah, financially it is. But what happens if you're like, you know what? We're going to take it at 62. And this is why. I'm not even going to show you numbers, because you want to go travel the world. You want to go see where your ancestors were from. You want to take your kids and your grandkids and go travel with them while they're still young. Well, think about how many trips you can go on from the age of 63 till 70. You can go on 18 trips. Is that worth it? They'll be like, yeah, that's worth it. Okay. Well, then it doesn't matter what's the better financial decision about monetary money? It's a matter of fulfillment, because that then you've now changed the conversation to where you're pointing towards something that you can control, that's psychologically impactful for that client, that's allowing them to be fulfilled, that's going to keep them from doing something silly with their money when the markets go down, because we all know that the markets are going to go down. That's what this is all about.
That's tremendous. I hope people are taking note of this stuff. And I don't want to say you learned all this. I'm sure you learned a lot of this from your dad. He's been in the business a long time. I see a lot of advisors that I work with today, very successful, that have never been in a market that goes down, that has gone down, right? Sort of post 2011, lots of advisors that are running their business. They may have been in the business, they may just started, but they had no clients, or they were short term, right? So that psychology is really important to understand when a client gets wealth. Can we shift gears? I want to shift gears, and for the last 15 minutes or so, because you're doing something, and we've talked about your podcast, Bridging the Gap, and your YouTube, right? And the things that you're doing, which is unique to the industry, but I don't think it should be. I think that the industry is behind when it comes to branding you as an individual, right? As an individual financial advisor, and then connecting it to the firm, for the purpose of growing your business. I don't think advisors do that well enough. I think firms are behind. More firms are getting there. They're letting advisors do more. If you're an RIA, you can obviously do a lot more than you can if you're a wire. But talk to me about the Matt Reiner brand and why you're doing this, right? It's like you're sitting down at the table with your brother, and your brother's operating and he's doing all the other things, and you're out doing a podcast and you're out doing all your thing, right? What's the conversation like when you're saying, listen, this is why we're doing it. This is why I'm building this brand. Here's the purpose of what we're doing. And explain to my listeners why it's so important in this day and age that they have to get on this bandwagon before they get left behind.
Yeah, I think I'll answer all those questions. I think I want to start with why I want to answer one question that you didn't really ask, but you alluded to in there, is why advisors aren't doing it. And I think it's because we're all risk averse in this industry and we're worried about regulation. And I think that is a challenge that we have to be cognizant of. But it shouldn't be a challenge that stops you, right? And when so I think that the way to overcome that is that there's compliant ways to do it very easily, and you shouldn't be talking about stocks and bonds necessarily, right? You should be there, you create connection. So why am I doing it? Is because people don't buy brands, people buy people, and in creating that connection personally with people is what is going to drive business longer term. Now, the challenge with this is that I've been doing this for a good bit. And when you think about, like, when I talk to my brother and stuff, it's driving some business, but this is a long-term play. This is not a short-term play, right? Like, you set up a YouTube channel, or you set up like you start posting on LinkedIn, or you set up an Instagram, like, people feel like that's like the old days of when you set up a website, and like everybody felt like, hey, my website's up, the phones are going to be down.
They're looking at the phone going, why isn't it ringing yet?
you press like launch on the website, and then you're looking at the phone. Like, it just doesn't work that way. It's a matter of consistency. It's a matter of providing value. And, if you think about why I feel this way, and I'll talk about what it means, I think, to our business longer term, is you have to also go back to something that I didn't really allude to, of how we started our marketing within Capital Investment Advisors. Our growth in our business started when Dad partnered with someone that had a local radio show here back in the early 2000s, and that was the impetus to growing the business. And we still have my business partner now. He is a new business partner. He's new from the guy that met Dad, but he's been our business partner for about 13 years now. He's doing the radio, so we still do the radio. He's written a couple of books. I've written a couple of books, and he's focused on clients that are end clients. He talks to the end clients of CIA. And that's the focus. And I learned from that, and I saw how effective that is. And why was that effective? Was because every Sunday morning, our team was building a relationship with many people out there on that were listening to this radio station. And we were able to build this, we were able to talk about our family. We were able to talk about the markets, but they felt like they were in our office. And it was really powerful. And for me, I felt that there's an opportunity for us to go and talk with advisors. And, my focus has always been with the Matt Reiner brand is how do we communicate to advisors? We've learned a lot. We want to be leaders in this industry, seen as innovators, seen as collaborators, seen as community builders for the industry, because ultimately our mission is to be able to, we believe that every single person should have access to human financial advice because of the psychological impact and the ability that they have. And we know we would love to be able to be the firm that does it for everybody in the world. That's impossible. So we think that if we can go be the leaders and the innovators and take our knowledge of what we learned to build our business, and we can then, go out and be a leader and innovator to the community, then we're going to be able to fulfill our mission of bettering financial outcomes for individuals, because we believe that financial advisors help from a psychological standpoint, along with all the other aspects. And so part of the vision that we have is it's a long-term vision of how do we build this brand that's going towards the market. Because, we've talked about before, there's going to be consolidation in this industry, and we want to build trust with individuals that hopefully one day, maybe they want to call us and say, hey, we would love to be a part of what you're building at CIA or at Wella Strategies, which is our other RA, or we want to be a part of what you're doing at Benjamin. But I don't want it to be a sales job on those. I want to provide value that can help these people build their firms, because whether or not they want to come work with us, if they can better their firm, it's going to better the overall, view of advisors and build towards that mission. And so we have multiple different types of businesses, right? We have CIA, which is our wealth management firm for, the millionaire next door. We have Wella Strategies, which is over RIA for the mass affluent. We have Altera, which is a private investment firm for, high net worth individuals, ultra high net worth individuals. We have a family office within CIA, and we have a technology company. And each of those businesses have different personnel that we're working towards. And so my mission is to build a brand that creates value that I don't really care what's the outcome for me. It's a matter of, yes, I want to create value. And ultimately, I believe that that's going to pay dividends for a multitude of our businesses over time. But if it doesn't, it creates us in a light of being a leader and an innovator. And that by itself creates value to our businesses. And so that's the kind of the journey. The reason it's tough for advisors is there's not one-to-one ROI. And I have to talk to my brother about this as well, Mitch, and we talk about it all the time. It's like, you're spending all this time on it, and like I sometimes think about like, wow, you put out a LinkedIn post and you only get like 150 or 300 views of it. You're like, what the hell am I doing? Or like a YouTube video and there's only like 20 views of it. You're like, what are you doing? But it's the consistency, because then you have those that are 15, 20,000 views or whatever it may be, and you start to build a brand. And the best piece of feedback I ever get is when people send me back and be like, thanks for this information. And that's what it's all about.
Yeah, I think that's where you and I are aligned. I've had a lot of people sort of as I've grown our presence online, LinkedIn and Instagram. Why are you doing this? Like, where's the connect the dots to the revenue? And I have clients obviously that call in from podcasts and all those other things, right? But it's really about being on the forefront of being an industry expert, paying it forward with advice and guidance, and what advisors need to understand, which you clearly do. And I'm sure you sound like you've had some conversations with your brother over time about being patient about it. It's a really broader tactic for your what I call your sort of your online presence. In this day and age, you meet with somebody, one of the first things they're going to do when they walk away from you is look you up, right? And what does your online presence look like, and tell them about you. And it's I didn't know about the radio show thing, so it's so cool you're saying that, because I've tried to get advisors that I thought have unique stories and are unique people. I'm like, you need to do a podcast. Podcast is like the new version of the radio show, right? Because on the radio show, you got to have conversations, and the more you did, the looser they were, and the people that they got to know who you were as an individual, not like, oh, he's really smart. He's got this degree and that degree, and he knows all about modern portfolio theory. They don't care about that stuff, right? They get to know you, and they remember who you are as an individual and your family, and they remember stories about you're talking about your dad or whatever it is, right? And so, and that's why they want to do business with you, not because you're smarter than the next guy, because most advisors in this industry are smart people, right? Yeah. And the services and the products that you have to offer are all the same. And so what's the separator? And so podcasts and YouTube channels, and it doesn't have to be fancy, right? You pick up your phone and you do a recording, and some of my best posts are me recording content when I'm in my boxing gym on my phone because I had a great thought, right? Because it's really about the content that you're putting out to the audience. So for advisors that you're listening to this thing, don't get all caught up in your head about what you should be putting out. Obviously, you can't put out stuff that your firm wouldn't approve, right? Don't talk about, buying this stock and buying that stock. It's the other stuff. It's the softer stuff. It's the psychology stuff. It's telling your story about a client that you just helped, solve a problem with their kid going to school, or, retiring early, right? Going through an analysis and helping a client make the decision to retire early because they wanted to travel to Italy or whatever it is. That's the kind of stuff that they want to hear. And I'm really proud that you're doing that, because I see some more and more, primarily in the RIA space first, but I just don't see enough advisors telling their stories and building their brand, separating themselves from the firm that they're at. I wrote this down. People don't buy brand, they buy people. That's tremendous. And so, you have to create a story that makes someone want to buy you. They want to call you up. And nowadays clients are used to not having the advisor right down the street because of, Zoom and COVID and all that other stuff. They are more than happy to work with somebody if they've gotten to know them over time, because they're following your stuff online. Maybe they see interactions that you're having with clients, called sort of like the Jerry Maguire thing. At the end, Troy Aikman says to the other guy, Cooch or whatever his name is, why don't we have that relationship, right? And he goes over to hug him. Like, that's what you're trying to get to. And I think the more clients get to know who you are, the better. And you made this point too. If you're a practice where you're trying to hire advisors, right? You're trying to recruit advisors to your firm. It's the same thing, right? Yeah, there's payouts and all that other things, but it's really about who are they going to work with, and they need to know who you are as a principal of a firm. If you're trying to trying to attract people to your firm, and if you have no brand presence and they look online and you don't see that as an important thing, I always say that what are the other things that you're not going to pay attention to at the firm that you're not doing if you don't view that as an important part of building the company. So,
that's such I just want to touch on one thing that you mentioned, because it's a vulnerability, I think, is something that advisors have difficulty with, is there's that soft skill, because we're analytical in nature. Like, I mean, I'm very analytical, and it's taken me time to kind of open up, but I've also been I've also got to know myself and go deep on that, right? With a lot of different aspects. The vulnerability, I think, is so important for this to work, because if you're just trying to sell and get an immediate outcome, it's not going to work. But you've got to be vulnerable, because if I always tell people that as advisors, we have to remember that our clients are basically walking in to our office and in theory, just like naked. Like, they're walking in naked to our office, like walking into a random room, because they're telling us everything. We're asking them to tell us everything, but we don't put the same onus on us to tell them about us. We don't have to tell them about our financial situation. We don't have to tell them, but we can tell them about times when we made mistakes. We can tell them about our family. We can tell them about our trips. We can tell them about all that stuff, because that creates a relationship. And that's the one thing out of many that I feel is probably the highest, is that I take away from my dad, is I used to sit in his meetings, and 95% of the meetings were talking about just like random stuff, like family, like sports, like trips, boats, cars, whatever. And then 5% of the meeting was like talking about the portfolio. And that's when something like went off in my head. Like, there's something here. Those clients love him. And there's a reason. Not because of how he performed, the performance of the portfolio, it's because they love the guy.
Right.
He's a great person. And I think that we get caught up in the weeds of like, we've got this great strategy or this and that. But if you can get away from that and just be you, you have friends. Everybody has friends. Why are they friends with you? It's not because you know more than them. It's because you can relate to them. And so you've got to find a way to relate. And I'm able to relate to a 65-year-old, widow or couple because we have families. We were young at one time. Like there's an ability to do it. And I think, but being vulnerable and talking about your not being shy about, your challenges, like my 70-year-old clients, I talked to them about my 3.5-year-old son who has tantrums. They're like, they get it.
Yeah.
It's
right.
cool, but they see me as a real person. And I think that that's so important, especially when it comes to having to manage through volatility of something that you can't control, which is the markets.
Awesome. Listen, we're gonna leave it at that. We can go on for a lot longer. I think that's a lot for the audience to take in. It's really important stuff that people need to understand. So, for my clients and my listeners that are listening right now, how do they go about finding more information on you, your brand, your YouTube channel? If they're interested in joining a firm like yours, give us some idea where they can go.
Yeah, so I'm active on LinkedIn, Twitter, and YouTube at Matt Reiner on all those. And also you can go to mattreiner.com. That's where we post. Sign up for my newsletter. We send out a lot of great content on a continuous basis. And yeah, message me. It's matt@mattreiner.com. And happy to chat with you about anything. And so that's where we're posting everything.
Awesome. I appreciate it very much. Thank you to my audience. Thanks for joining. If you're new to the podcast and YouTube channel, thanks for coming on board. Don't forget to check out my Instagram account at franklarosa.elite, also on LinkedIn. And, check out his podcast, Bridging the Gap. There's some great content. And again, podcast and YouTube channel. So they're both out there. I like YouTube channel. I like to see who's talking. So it's really great. Matt, thank you very much. I appreciate your time. And I'm excited. We'll do this again for sure. Thank you.
Thanks, Frank. Appreciate you having me.
Thanks for listening to Advisor Talk with Frank LaRosa. If you're looking for more advice or solutions on any topics in the financial services industry, or you just want to subscribe to our podcast, head on over to eliteconsultingpartners.com/podcasts.